Welcome back to Talk Mortgage to Me. I am your host, Dustin Owen, and with me today is a top 1% loan originator in the entire country. He's actually my ex-business partner. We worked together for 17 years. He's one of the best loan officers I've ever been around, and the guy absolutely knows his stuff inside and out. He is Mike Smalley with Cross Country Mortgage. Mike, you were telling me that you wanted to talk about a recent family that you helped, but you helped them on a refinance, not a purchase.
Yep.
And you actually put them into a 20-year loan instead of a 30-year loan.
Yeah.
Walk us through that scenario.
So I think, we're coming into a season with interest rates drifting lower, and most people who purchased a house between 2022 and 2025 are hoping to refinance, when it's feasible, when rates are at a low enough number. And what I found over the years is when people refinance a 30-year fixed to another 30-year fixed, they're going backwards in time. You might be 4 years into a 30-year and you're going back to another 30-year. And so, yes, your monthly payment's going down because your rate's lower, but part of your monthly payment going down is you're stretching it back. And if you run kind of an amortization schedule of how much interest you're paying over the next, let's say 3, 5, 10 years, it's not as big of a savings as you think. So what we encourage people to do is look at doing a shorter term. And I found that a 15-year loan is likely going to be a significant bump in your payment. And people can't always afford going from like a 30-year that they're 2 years in down to a 15-year. That 13 years is oftentimes too much.
Because what you found is that their mortgage payment actually goes up. It doesn't go down.
And they're paying that increase is all principal. But if you can't afford, to go from $2,500 to $3,500, why would you do that?
Correct. No one wants to be house poor.
Right. So what we found is if you go from let's say a 30-year loan that you're 2 years in, so 28 years left, if you go from 28 down to 20, with rates dropping a point to maybe 1.5, 2 points, for over the last couple of years where they spiked, you can in many cases keep your payment almost the exact same. So it's not a payment reduction strategy. It's keep my payment the same, but knock off 5, 7, 8, 9 years worth of term. And if you kind of run an amortization schedule out, the amount of equity you build, how accelerate it for the same monthly payment is pretty significant. We've also noticed that the difference in rate between a 30 and a 20-year is changing. So for many years, a 30-year fixed and a 20-year fixed was almost the exact same interest rate. For the past couple months, that gap has widened. And so we're seeing people that could get a 30-year, let's say at 6, a 20-year at 5.625. It was always 30 to 15 that would drop your rate. But now you're seeing a big rate drop from 30 to 20. So yeah, most of the clients that we had, and we've got hundreds that have, bought homes with us the last couple of years that are hoping to refinance at some point when rates hit like a target. Most of them were running schedules on a 20-year amortization, not a 30. And the play is not payment reduction, keep the payment the same, just pay the house off a lot faster with the same payment.
Have you recently helped a person with that type of refinance?
Sure. Yeah.
If so, kind of walk me through that scenario. Like what did they do for a living? What was their house worth? What was their income like? Like without using specifics, like we don't need first name, last name, social security number. But
yeah, so I've got two, and one actually is choosing to do a 30-year. So I've got one that has 7.3 or so.
Is their current interest rate?
When they bought the house, yeah, and they can get into like the upper 5s range, low 6s. So I recommended a 20-year because we could have done a 20-year, knocked off 9 years of term. Their payment was going to go up about $25 a month. But what I didn't realize is this person has a significant other. So a couple own this house. They're young, in their 20s, but they have a roommate or two.
Okay.
And the roommate or two are paying rent. The roommate or two are going to move out at some point because these two are probably getting married at some point. And when that happens, the roommate's out, that, let's say, $500 a month of rent that's coming in goes away. So one person was like, you know what, Mike, I get it, but when my roommate moves out, I would actually like the lower monthly payment.
Correct, because they want to be able to afford the home.
Right, and so it becomes kind of a payment scenario. So for that person,
yeah,
it was
you're taking them from 7.375 down to
6%, 5.99. Okay. They're only going backwards 1 year because they just did it a year ago, but they're going from 29 years left back to 30, but reducing their payment by like $400 a month.
Yeah.
But another person, that same scenario, like 7% to 5.625, knocking off 8 years worth of term, $50 a month payment increase. But $50 a month is $600 a year. They're building like $5,000 a year more in equity. So
wow.
We did a video the other day and we said, if it costs you $3,500 in 5 years to save $30,000 in equity. Does that math make sense? Of course it makes sense.
Yes.
But you have to be able to afford the $3,500 increase in your payment, which was like $50 a month, or $60 a month, over 5 years.
Yeah, that second scenario, they're not getting cash flow rich,
Right.
but they're getting equity rich.
Yeah.
Yeah. Very cool.
Yep.
Mike, if people want to get a hold of you because maybe they have a refinance scenario they'd love to run by you, what's the best way to reach you?
Sure. I'm always available on my phone. So 407-367-9190 is my best number.
Yep. Email is michael.smalley@ccm.com. And if y'all have any other real estate or mortgage needs, you can also look at the link in the comments below, fill out the questionnaire, and we can have someone like Mike reach out to you to answer any of your questions if reaching out to Mike wasn't what was the best decision for you to make. This has been Talk Mortgage to Me. I'm your host, Dustin Owen. This is my guest, Mike Smalley from Cross Country Mortgage. If you like this channel and content like it, if you haven't done so already, make sure you subscribe to the channel